Good afternoon, my name's Craig Earl, I'm market analyst at ALPARI UK, and welcome to our daily update on the markets. Today we're seeing stocks trading slightly higher, and the reason for that is simply because earlier in the week we saw a lot of optimism return to the markets. We've seen the Spanish banking system take main focus, main attention in the Eurozone. The Eurozone leaders are now taking a more proactive approach to resolving the banking crisis, and we've seen that through the external auditing now taking place in the Spanish banking system, when we're hoping to get results for this to find out exactly how much bailout these banks will need, and these results should come at the end of the month. Now, we also saw earlier in the week, we've had talk of QE in the US, the UK and the Eurozone. On Wednesday, we had the ECB president say there's going to be no further LTROs in the Eurozone. They still believe there's plenty of liquidity there, and even though some banks are still struggling, especially in Spain and Greece, they still believe that we haven't seen the full effect of the LTROs. In the UK, we've seen the Bank of England also say there'll be no further QE or rate cuts. So again, this optimism has kind of moved away. Yesterday, we also saw Fed Chairman Ben Bernanke drop no hints as to whether there'd be further rounds of, well, a QE3 more specifically. However, they have said the door is open in the future if need be, but they just don't believe that this is the right approach to be taken at the moment. So again, we saw the optimism return earlier in the week, but having seen no further QE in the Eurozone, in the UK or the US, this has put a dampener on sentiment in the Eurozone at the moment, sentiment globally, especially in the equity markets. We also saw Spain downgraded last night. Fitch downgraded Spain to BBB, which is a 3-notch downgrade. So again, the optimism which was there earlier in the week has now been taken away again, and we're now heading towards the weekend where investors again are feeling a little gloomy and feeling not so optimistic anymore. And with a couple of weeks now till the Greek elections and the results of the Spanish audit, I expect the markets to stay this way at least for the next couple of weeks. We've also had rumours out today that Spain could actually request the bailout for the banking system this weekend. So again, this has knocked investor sentiment and knocked confidence in the markets, and seen people move back in towards the safe haven bonds, safe haven currencies such as the dollar and the yen, and move away from equity. So we expect the US markets to follow, just as the European ones have, trading down around between 0.5 and 1%. With this, we've still seen a positive week in the equity markets. The FTSE looks on course to have its best week so far since the start of February. The Dow and the S&P in the US look to have the best week this year. Now, given how strong Q1 was, that's a very positive sign for the markets. It looks like it shows that we're going in the right direction, that optimism and confidence is returning to the markets. So again, still positive signs, even though we've had one bad day, no further signs of QE, but we are still seeing that optimism returning to the markets slowly but surely. We've seen the price of Brent crude come down below $100 finally after reaching $128 only a couple of months ago. It's now trading at around $97, but again, this is from renewed concerns from the Eurozone still filtering on into the crude oil prices, into the commodity prices. However, I do expect that to turn around quite shortly, especially with the good data coming out of Australia over the last few days, and China reducing interest rates by about 25 basis points in order to stimulate growth in the economy. Now, in the currencies, we've seen the euro and the pound. They've had a very good week this week again, making gains against the dollar in particular. For the first week we've had 5 straight weeks of dollar gains against those two currencies. We're now on course to have the first week of euro and pound gains. However, a lot of these gains have been eliminated today by the fact that people are looking for that safe haven dollar again ahead of a weekend, which we could potentially, if rumours are to be believed, see this bailout of the Spanish banks. However, I mean, we've got to look at how far lower sterling can go. We've seen the cable charts, on the weekly charts, we've seen it trading in a wedge since 2008, and we're now reaching right along that support line of the wedge. So any lower, and we could see a break below from around 153 at the moment. And if we break below this wedge, we could see it move all the way back down to around 135. So we are actually looking for that bouncing cable chart. So we could see some sterling gains over the next few weeks, as sterling, again, as it did over the last month, we saw it become more of a safe haven currency, and we saw it make steady gains as the weeks went by. So we could see that again in the cable charts, whereas euro, I do expect it to continue to fall and continue to move into that downward trend, as long as this banking crisis in Spain and the uncertainty surrounding Greece continues. That's all we've got for this week. My name's Craig Earl, market analyst at ALPARI UK. Thank you very much for joining us.